What's going on, guys? It's Andy here. Welcome back to Painfully Honest Advice. I changed my strategy, but not fully. Now, here's the thing. In this video, I'm going to go ahead and share with you guys a brand new pie I added with M1 Finance in my bucket list portfolio. Now, if you're new to this channel, I do focus on dividend growth stocks within my bucket list portfolio that I invest with in M1 Finance. I have around $80,000 invested in the stock market within this portfolio, but the main objective of this portfolio is to go ahead and invest in dividend growth stocks. But I am going to go ahead and share with you guys a little bit of a twist right here. It's going to be a little bit of a shocker because I did change my strategy a little bit in regards to this portfolio and added a brand new pie. Now, before we go ahead and jump into the video, if you are new to this channel, guys, don't forget to subscribe to the channel down below. And if you like videos around the stock market, don't forget to smash that like button, as it really does help keep me motivated, and YouTube seems to love that like button. But now I'm going to go ahead and break it down, share with you guys exactly where my portfolio is at. Plus, we're going to go over the stocks that I added and the new pie that I added with M1 Finance. So I'm going to go ahead and jump onto this computer here and share with you guys what exactly I just added. Now, here's the thing, guys. I have in this bucket list portfolio $81,372 currently. The stock market has been on a bit of a climb lately, so the portfolio is up roughly around 25%, and I'm up about $10,000 within this portfolio. Now, here's the thing. Within this bucket list portfolio, I have separated within the 11 sectors within the S&P 500. So in total, I have 11 different pies, one pie for each sector, as well as a brand new pie. Now, I like to go ahead and separate within the 11 different sectors because at the end of the day, I don't want to be so heavily invested in one sector, and it goes ahead and keeps me diversified. I have less than 50 stocks within this portfolio. Some may think it's too many, but the way I look at it is I invest in sectors, not in individual stocks, because it keeps me very well diversified, as well as I like to go ahead and dollar cost average because long term, I don't know if the stock price is going to go up or down, and it just keeps me very disciplined and it keeps the emotions out of buying or selling into a stock. Now, if we go ahead and look at the 11 different sectors, these are basically the different sectors that I have within this portfolio. But guys, the main sector that I'm going to go over here is going to be the brand new pie that I just added, which is going to be the growth pie. Now, in regards to the growth pie, I just invested in this pie in the last week and I'm already up 13%. Now, I know what you may be thinking. Yes, I did change my strategy around a little bit because these growth stocks I believe in. I also use their products and investing in the stock market where I'm going to be looking at keeping this money for the next 20 plus years. I just don't want to miss out on the opportunity of the growth in these stocks. So guys, my goal within this pie is going to be to go ahead and grow the growth pie to about 20% of my total target allocation. So I'm going to have basically an 80-20% where 80% of the stocks are going to be in dividend focused stocks, which are going to be my dividend growth stocks, and then 20% is going to be allocated to these growth stocks. Now, I may add stocks in the future within this growth pie, but right now, I'm going to share with you guys the 3 stocks that I have in this portfolio. So here we go. The first stock is going to be Tesla. Now, Tesla, I am a huge believer in this company. I own a Tesla. If you look at some of my previous videos, I talk all about my Tesla, and I'm a huge believer in this company and where this company is headed. This company is basically taking and innovating the auto industry with their electric vehicles. Plus, they are also testing full self-driving, and they're basically 5 to 10 years ahead of the curve when it comes to full self-driving. Now, in Tesla, just in the last week, I'm up over 20%, and I've made over $164, which is not bad in 1 week just for investing about $1,000 in this company. So I am going to go ahead and keep focusing on growing my position within Tesla. Plus, if we go ahead and look at the chart for Tesla, just in the last 1 year, Tesla has been up over 700%. Now, I do invest in the stock within my other portfolio, which is basically my retirement portfolio. But within this portfolio, this is basically one of the newest stocks that I added. Now, I will say with Tesla, their forward PE ratio is at 244. So this stock is definitely overvalued based on their earnings at this point. But the potential upside of this stock is huge. Now, I do believe that Tesla stock price will go down, and that's why I like to go ahead and DCA into the stock. But now if we go ahead and jump into the next stock that I added, and this is going to be the next growth stock that I added within this portfolio, that is going to be Peloton. In Peloton, I have about $400 invested right now. I am up about 3% in the stock, or about $10. Now, I really do believe in Peloton and basically their subscription model. Peloton's retention rate on their app and on their subscription model is 96%, which is huge. And also, I believe Peloton is changing the way that people work out. They have many different opportunities to go ahead and grow in the future with new workout equipment that they can go ahead and introduce. And I believe this is going to be a very strong ecosystem. But now, if we go ahead and look at their stock price, Peloton stock just in the last 1 year is up 230%. And because the stock is a brand new stock that just actually went public in this last 1 year, this is actually not a bad time, I believe, to go ahead and invest in this company. But guys, that's going to be the second stock. Now jumping into the third stock, and this is basically going to be the final stock that I added within this growth pie. And this stock is going to be Amazon. Now here's the thing, with Amazon, this is another stock that I'm a huge believer in. And with Amazon, they just make everything so easy. They just got into the healthcare sector. So Amazon is really changing the way we go ahead and shop. And because this company really lives up to their expectations that they set for their customers, for example, with Amazon Prime, their 2-day delivery, they've really figured out the logistics behind this. And I do see a huge growth potential with this company down the road. Now, they might plateau at one point, but I just see that this company is going to go ahead and keep buying out new companies. And guys, this company's just growing. So I'm a huge believer in Amazon. Right now, I'm up about 3.34% or about $10 in this stock. And if I just go ahead and look at the last 1 year with Amazon, they're up about 75% as far as the stock price goes. And if we go ahead and look at the last 5 years, they're up about 374%. So this is another stock that I really do believe in long term. And if we just look at the overall growth pie here, these are basically the three stocks that I have in here. The main allocation is going to be in Tesla. So I have 60% allocated in Tesla, and then 20% allocated in Peloton, and then 20% allocated in Amazon. And if we go ahead and look at the three stocks that I'm currently buying, the three stocks that I'm actually investing in pretty actively throughout the next month are basically going to be these three stocks with Tesla, Amazon, and Peloton. But guys, here's the thing. I'm not changing my full overall strategy into growth. I am going to still keep on investing in dividend growth stocks because of the discipline and because of the income that those companies generate me. But if I go ahead and look at these companies, I just do not see not investing in these companies as being an active investor in the stock market. Now, my goal is to go ahead and grow this pie to about 20% of my total target allocation because I want to go ahead and see my money grow over time. And once I'm closer to retiring, basically what I'm going to do is go ahead and switch this growth stocks and go ahead and get out of these growth stocks and invest in more dividend-based stocks that are going to go ahead and pay me income. But because I have at least 20 years before I'm looking to retire, I do want to go ahead and just grow my money. So hence why I wanted to go ahead and add this pie as well. Now, if you are interested in investing with M1 Finance, I do have an affiliate link down in the description where you do get $10 free when you go ahead and sign up with them. But guys, that's going to basically go ahead and wrap it up for this video. Hopefully you guys enjoyed this video. If you do like videos around the stock market, don't forget to subscribe to the channel down below just to keep up with all that. And if you don't mind smashing that like button, if it really does help keep me motivated, and it tells me that you guys like watching videos around topics like this. But thanks guys for watching. Until next time, see you guys at the next one.